Hello everyone, thank you for joining me. My portfolio just hit $100,000. That's very exciting for me and for a couple of reasons. First, I worked really hard to get to this goal. I worked really hard with researching stocks, with learning how to invest. I had some bad times when took bad decisions, and I had very good decisions that I took. And I learned from the bad ones and trying to learn also from the good ones, and even more important, to understand what is good for me, to understand which type of investor am I. There are a lot of different ways to invest and do and make money. And you can do technical analysis, you can do fundamental research, you can do short-term investing, long-term investing. And what I'm interested more is in fundamental research, long-term oriented. This is what suits to my character. But guys, you have to search and discover what is suitable for you. So I want to also show you guys two quotes, one from Charlie Munger and the other one from Warren Buffett, which makes me very excited about my position, and I hope it will give you motivation as well. The first is Charlie said, the first 100,000 is a bitch, but you gotta do it. And what he meant by that is that compound interest start taking a big effect when you cross the $100,000. And we can easily like look at an example. If we take a compound interest calculator and we check like let's say what is the difference between the 20 years of compounding with 10% interest annually with $10,000. You will see at the end you will have respectable $67,000. But if you will take a 100,000, let it compound for 10 years with the same, like with same 10%, you will see you will reach $672,000, which is much greater. So it's starting, the snowball effect starting to really roll down from here. Um, Second quote from Warren Buffett is that compound interest is the seventh wonder of the world. So in order to enjoy the wonder, the seventh wonder we called compound interest, you need also to have a somewhat big pile of money. Because if you have very little pile of money, you won't enjoy it fully. Obviously, with any amount you can invest and try to do the best that you can. But um, I'm going with what Charlie Munger said, that 100,000 is a great goal to cross, and I will see what the future holds. And lastly, I want to share with you guys like how what is my strategy in order to keep compound my portfolio. I listed here few items. Obviously, there is so many, but few that I think are currently very important to me. And one is to have very low probability to lose money. And when you have bull markets, it's very easy to be very excited, to put a lot of money into risky assets. But you always need to remember what happens when the sentiment will change. What happens when everyone is scared and stock price is going to go down. Will you feel comfortable not to sell in a loss? So I'm trying to find high quality assets, high quality companies that can grow their revenue due to their big total addressable market, their monopoly position, and the high value proposition, and actually giving great service to the public. Um, I also looking for low debt. It's, if you want to search for low probability to lose money, you have to consider low, like, invest in low debt companies. Fourth is undervalued stock. Obviously, everyone looks for undervalued stocks, but more especially underappreciated assets because of unjustified fear. Um, let's say, the stock is trading at very depressed valuation because the market is fearing for something that you think that is improbable to happen. So when you recognize this type of situation, you can go heavy, and if you're right, you will do a lot of money. Or you can found a company that really take wrong decisions, but it's fixable, not and it's not hard to fix it. And if you think it's easy and the company is on the right path, you will do a lot of money. And obviously, for that to happen, we need to recognize a great management team that are very capable to do this. Six is not a must, but indicate of good management relationship with shareholders is returning capital through dividends or um, buybacks. Um, what else I'm considering in my strategy? So the story is the most important thing. The story of the company is the most important thing that you can analyze, and if you can tell the story that is very positively, that's great. But you have to focus on the data. Data is a must. If the data is not supporting the story, I won't go in. I won't go in. I can't go heavy. So a third, obviously, go big when risk is low and reward is high. I'm trying to find situation when the risk is low, reward is much bigger, and then I can put a lot of money. I can load the boat. And if I'm right, and I feel very confident that I'm right, I will do a lot of money and, let it compound. I hate, buying company. The company is like popping 20% and then I will need to sell it. I'm trying to find companies and situations when I can buy and just let it compound and grow and make me money while I'm sleeping and monitoring the story, that the story didn't change. So yes, that's all guys for this now. I hope you enjoy this video and it gave you some value. If you like it, please hit the like button. It will motivate me to create more videos. And please subscribe to see my next videos. Thank you everyone who listened to me. Bye for now.